Welcome back. You're with us on Bazaar, and the market continues to trying to make up its mind. That's what the situation is like. But there is a bit of a profit-taking element that's now finally becoming fairly visible. Nifty still, of course, around the 17,700 level. So let's keep it to the corporate conversations. And the next company on our radar is Max Healthcare. Now, the company's third quarter performance was fairly strong. Brokerage firm Jefferies actually has a buy call on Max Healthcare, and their target price is 530. So they're expecting significant upside from where the stock is right now. Their note indicates that the company is well on track to add 1,000 new beds by FY25. Let's discuss this and more with Abhay Soi, Chairman and Managing Director at Max Healthcare. Abhay, always great to have you on the shows and to get a conversation going. Now, obviously, that's one view from the street. I think but it points us to the question, in terms of growth, what will be the next kicker in terms of capex, additional areas that you perhaps are looking at as we are getting set for the new fiscal year. Give us some cues and clues in terms of numbers and qualitative points as to what lies ahead.
So I'm not going to give you a guidance on revenues or profitability, of course, but we are going to be incurring a capital expenditure of close to 4,500 crores over the next 4 years. We are looking to commission about 500 beds, 100 beds this month, another 100 in about 2 or 3 months, and then another 300 beds in about by September, October of the current year. So it's essentially 500 beds on a base of 3,400 beds that we have at present. And we should be adding another 1,500 beds thereafter in the following year. So all of that is on track. I think, our construction is on. We partnered with large turnkey project companies to ensure that happens on time. So these are really the big two kickers. I think other than that, we are also distilling our payer mix, so that should have some improvement in margins going forward as well.
Abhay, hi, good morning. Your average revenue per occupied bed, I think, is at the highest you've seen in many years now, almost 67,000 rupees. Tell us a little bit about whether there is scope to increase it further. Is there more, scope for operational up moves? If yes, what could the triggers be, purely on the operational side, in the next 1 year? Oops. I can't hear you very well. I think there's some issue with your audio, Abhay. If you could repeat that. All right. I think we'll try and get back.
Can you hear me now? Hi.
Yes, I can hear you loud and clear now. Go ahead.
I think our ARPOBs are significantly higher already due to our clinical mix. 35% of our beds are critical care beds. That essentially signifies that we do a lot of high-end tertiary care work. We're able to do that because majority of our assets, 85% of our assets are in the metros. That's where the best sort of clinical talent in the company tends to reside. We are repositories of the talent. So we run a lot more high-end programs compared to anybody else effectively. And that is something that leads to higher ARPOBs. This is in spite of about 7.5% of our beds being totally free. 30% of our beds are catering to institutional business. So going forward, you're going to see some distillation as well of the payer mix, which should be a key lever as far as ARPOB is concerned. I think other than that, there are always sort of innovations which are happening in the healthcare sector. Many years ago, we used to do, angiographies, angioplasties, and so on. Now, the same hospitals are doing heart transplants, are doing, pacemakers, putting pacemakers, are doing LVADs, and so on. General surgeries are moved to robotics. As we go up the value chain, you will see a move up on ARPOBs as well.
All right. Hi, Abhay. Good morning. Abhay, before we talk about business, I visited one of your hospitals here in Mumbai, the Max Nanavati Hospital, and I have to say, it was top-class service that you're giving out there to the patients. So I thought it was really phenomenal. I have to compliment you on that.
Thank you.
But getting back to a couple of numbers that you just gave out, I think 4,500 crores is the capex that you have laid out for the next few years. To take your capacity, if I got that right, 3,500 is the base. You're adding 500 in this year, plus another 1,500. So it goes to around 5,500 beds at current reckoning. How do you fund this 4,500 crores, if you could tell us? And over the next few years, if you could space it out for us?
Right. So firstly, I think we have a base of 3,400 beds. And just to clarify, we are adding another 2,800 beds in the next 4 years. The count I've given you of 500 and 1,500 is up till 2025 alone. I think, the total capacity addition is 2,800 beds, which is at a cost of 4,500 crores. By doing this, we are actually sort of elevating a business need, because majority of our hospitals are operating at 85% plus capacity, and this is midnight occupancy. That means during the day there's extensive waiting, which moves from hours to days, sometimes in our ERs. There is a need for us to put up beds. So the majority of these beds, about 90% of these beds, are brownfields. So these are adjacent to already existing hospitals, which are sort of bursting at the seams. Yes, so we're going to be incurring 4,500 crores, and we're funding this entirely through internal accruals. Even at present, we are a debt-free balance sheet, and we continue to add about 250 to 300 crores of free cash flows to our bank balance every quarter, in fact. So we intend to do this entirely through internal accruals over the next 4 years.
It's very, very interesting, and obviously very impressive for your stakeholders as well, that you can do it entirely through internal funding, Abhay. You did mention that the payer mix is changing. If you could just tell us if it's possible for you to tell us to what extent will the institutional business go down? And a word on medical tourism as well. Post-COVID, are we back at the earlier levels, better than that? What are you projecting from that business?
As far as international is concerned, we already back to about 110% of pre-COVID levels. This is in spite of Afghanistan, which has been a key market for us, which used to be about 12% of our business, coming down to not at present, because you don't have any medical tourism coming, no visas being issued in Afghanistan at present. But like I said, in spite of that, we are at about 110%. The distillation that we are looking at will essentially look at perhaps the institutional business should come down to about 15% from the present 30% over the next 5 odd quarters.
So what do you see as the next inorganic route that Max Health would take? I mean, you're sitting on around 400 crores of cash on the books. Do you have any M&A plans in the near future? If yes, anything in this calendar year itself?
Yeah, so we are sitting on about 1,500 crores of cash, and we are net debt positive by about, I think, 300 odd crores. And, quarter on quarter, like I said, we add another 250 to 300 crores on that. So yes, we are estimating that about 50 to 60% of our internal accruals will be dedicated towards expansion, to debottleneck our businesses, like I said, with the 2,800 beds over the next 4 years. That still leaves us with our entire balance sheet and the rest of our free cash flows, and we intend to sort of deploy that towards inorganic growth. So we are looking at a lot of opportunities, so as we are scrutinizing, we are quite hopeful in the next few quarters we should be able to succeed as far as that is concerned. That should open up newer geographies and newer markets for us as well.
So which geographies are you looking at in the next few quarters if you're planning to close in on an acquisition? What are the geographies you're aiming for?
So, there are about 20 odd cities on our tracking list, because we've been very clear that, we would like to go any place where at least 2 or 3 of our competitors have proven viability. We are sort of very happy that the industry today, there are lots of such geographies where at least a couple of our competitors have proven viability. We typically have not been pioneers. We don't do pioneering business in the sense that, we don't go into uncharted territories, into newer geographies and so on. We are happy being second through the door, but trying to do it better subsequently. And, that's been our philosophy, and that's what we intend to sort of do.
All right. Good speaking to you, Abhay. Thanks so much for stopping by, giving us a brief idea in terms of how business is shaping up and also your plans for the next 3 to around 4 years odd. Well, let's move on then. Sugar stocks, they were in a sweet spot yesterday. And a media report suggests that there will be an additional 1 million ton sugar exports if output meets estimates. To discuss more on that and the likely development and how is demand environment, we'll be joined by Mr. Vijay Banka, the MD at Dwarkesh Sugar Industries, as well as Sanjay Manyal, the research analyst at ICICI